Notice these symbols that I have over here in the left-hand corner. That's Facebook, FB, GDX, which is the gold miners index. GLD is the spot gold index, 10%, I guess, of the spot prices for the gold market. So it's trading for 125. That means it's $1,250 kind of an ounce for gold. But don't need to know that information anyway. What I'm looking for, and what I hope you'll notice here, are the technical patterns that are very similar in each one of these, even though these stocks are completely and totally unrelated to each other. The technical patterns, these are all daily chart patterns, and the daily charts on each one of these showed prices to be at the same bottoms, and they formed these V-shaped type configurations. But the bottoms of the MACD indicator remained sharply higher when the prices retested these same bottoms back on the 28th of the month. On the GDX, it had a pattern where the prices were showing lower lows below that flat trend line here that was lower than this previous low, but a higher technical pattern back on the 21st of the month. And then the price was still kind of hovering around near those same bottoms even as of yesterday, and the technical pattern continued to increase its pressure against the price and allowed for the price to continue moving up only when the lower time frames, meaning real-time charts underneath this daily chart, stopped moving against the direction of the daily chart and allowed this pressure that's being exerted to be released in an upward fashion. The gold miners index was GDX. This is the spot gold price index. And notice that the prices more clearly mimic what I'm really looking for the price to be the same or lower on the bottoms, but the technical bottoms to be higher. Notice that this technical bottom was clearly higher over here when the prices were still hovering at the same lows or slightly lower than they were originally, where the indicator's bottom formed. And once again, yesterday, the price was yet again, for the third time, back at the same bottoms as it was originally, but the technical bottom was higher yet than either of the previous two lows, giving rise to a very nice move during the course of the day today. By the way, when this index was sitting down as low as 123.33 today and went as high as 125.67, it eclipsed several call option strike prices that were out of the money. That included the 124s, which or even 123.5 when this was at its low today at 123.33. Strike prices every 50 cents would have been 123.50, 124, 124.50, 125. The 125 calls today moved up well in excess of 3,000% just during the first couple of hours today, based on what we see right here, this strong technical push on the daily chart, and then the release of that pressure by the lower time frame MACD turning with it. Solar City was one that I pointed out to everyone the other day. The subsequent move that took place after I talked about it was about 700 or 800% on the out-of-the-money call options that happened very, very quickly, and the pattern also showed the price with that V-shaped configuration, the price at the same bottoms, technical pattern, sharply advanced to what it was before, and also this one was above the signal line, clearly the blue line above the red line, which they call the signal line, and a very, very clear and strong technical pattern. So all of these made for great out-of-the-money call trades just in the last couple of days this week in the multiple hundreds or multiple thousands of percent. All of these. Something to think about. Just these little stock price movements translate to multiple hundreds or multiple 1,000% returns with certainty in the patterns. That's the key detail. Anyway, take a look at this and see what you think, and I will check back on the markets again next week.